Hello traders, welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency, and first of all we're going to take a look at the euro dollar for the last part of this week. On Monday in that video I mentioned the fact that this is probably a wave 4 as price is going sideways, building a triangle chart pattern, which is typical for a wave 4 formation, and price is also sailing above these long-term moving averages after strong momentum. So we were already discussing that this is a 5-wave pattern for wave 1, ABC for wave 2, and this momentum up confirming the beginning of wave 3. We saw a follow through of 1, 2, 3, 4, maybe like this even, 1, 2, 3, 4, 5, finishing a wave 3 at the minus 161.8 target. Then we saw an ABC pattern, and I thought that this breakout could really start to wave 5. We had still one more pullback, so I'm not sure if this is an ABC that is extended or whether this is an ABC and a wave 1, 2. It doesn't really matter, to be honest, at this moment, because we got the push up and we got the target has been hit in around 119.75. That was the zone I mentioned, around 119.75 up to 120.25. We see that price is making some retracement right now. So I think that overall the 5-wave pattern that we first started to talk about all the way down here has been completed in almost its full sense that we expected. So I think that's great. Could it go up more? Well, perhaps. Let's take a look at the lower time frames here. And let me, by the way, if you're wondering what candles these are my SWAT candles, and if you are a SWAT member, you'll get access to them. And it shows basically very neatly when momentum is shifting from up to down. That's why I wanted to show you that very quickly here, that we already had here breakout and here and here, as you can see, those candles nicely indicating those breakout moments for upside. Now this one of course didn't work as well, but that said, it didn't break below the bottom either, so it's ultimately still worked. So beautiful blue SWAT candles here to the upside, as you can see, indicating lots of potential trades within these 5 waves to the upside. Anyhow, let me go down to the 50-minute chart. All right, let's assume that the ABC was finished here and this is a 1, 2. If this is indeed a wave 3, like this, and here was an ABC, okay, then we have to zoom in and we'll look at this fib. If this is a 3, then this could be a wave 4 and there could be one more push up to go towards that 120, 120, 25 zone. That's of course a very strong resistance. It's a psychological round level, and that could easily stop price and price could easily make a bigger kind of retracement at that point. So if this is a wave 4, those are typically shallow, choppy, triangle, bull flag kind of patterns that respect shallow fibs. So 23.6 fib was already respected with a bounce, but price seems to be going through that now. So the next logical spot would be the 38 fib, which is the ideal bouncing spot for a wave 4, and the 144 EMA. If price bounces there, if there's a bounce followed by a higher low and a break, then there is a good chance of another 50 to 75 pip push higher. Okay, in my view at least, if it bounces at the 50 fib, it could still be a wave 4, but any break below this 50 fib doesn't make it likely anymore. And specifically, of course, if it breaks below this top, no, that cannot be wave 1. Excuse me, my apologies. This top is the wave 1 here. That's the end of wave 1. If it breaks below that, that invalidates the 1, 2, 3, 4 pattern. So that would be then out of the window, and that would indicate that this wave 5 is probably finished in that case. Okay, so I'm not sure if it's going to make a higher high in this case. I mean, it's a 50-50 one in my view. I am not attaching any preference to either of the two. What I rather do is wait for price to react to the 38 or 50 fib. If it does bounce, then yes, it's starting to become more likely that we're going to get one more higher high within this uptrend, basically, right? If it doesn't, then probably not. And probably then in that case, we'll see a momentum lower, followed by a flag or so, or correction, and then probably one more lower, push lower. Because in that case, if it breaks through the 50 fib at 119.20-ish, we're probably looking at a bearish bounce on the daily chart. Here, what we're looking for, once again, let me remind you what I'm looking for here is a ABC pattern here to finish A, We're looking for ABC up to finish B at the previous top, or 88.6 fib. And then we're looking for a 5-wave down, probably within wave C, back to the previous bottom at wave A. That all could complete a bigger wave 4 after wave 3 here. All right, so this could be wave 1, 2, 3, like this. Now we're in a wave 4 going sideways. So if that is true, and this is indeed an ABC completed, and this is the A of a bigger bullish ABC, then either here or at 120.25, the wave A could finish, price could make an ABC down for B, and we can get a 5-wave up for C to finish the red B, and then down again, right? So let's see. Today's daily candle will give information about that as well. If today's daily candle has a big wick, that wouldn't help, and that could indicate that wave A is over, and we're going down 3 waves for B and then up again. But yeah, if we have a bounce, as I said, at the 38.2 fib, 119.37, well, in that case, the odds of price making a turn and heading up to that 50 fib with 6 and the minus 61.8 target here at 120, 120.25 is increasing, and that's where we could see an extension of this 5-wave pattern. All right, so we already had a 1, 2, 3, 4, 5. Let's see if that 5 can go a little bit further. Once we do get a higher high, one more higher high, of course, there'll be more and more divergence. Usually more and more divergence is visible, and then in that case, with divergence, of course, present, there's a higher chance that price will indeed bounce at the resistance and make some stronger downside and retracement, maybe back to this level here to make a bigger kind of inverted head and shoulders pattern. All right, so that's my view at the moment. Pound USD, we talked about it on Monday. Price was about here, saying that this is not a good spot because, contrary to the euro dollar, where price was above the long-term moving averages, this was below the long-term moving averages. So there's a high chance of a bearish bounce at the 50 fib. Just even though there was a double bottom at the double bottom, there is a chance that price will, or a good chance that price will react to that resistance, and it did hit the 50 fib, as you can see, and made a decent pullback. I also said, though, that keep an eye on the higher low, because there's a good chance the price will make a bounce as it retests the double bottom of double bottom. And that's what happened as well, as you can see, making a push up after a higher low here, testing this support zone and testing the 78.6 fib. The pound dollar specifically likes the 78, 88.6 fibs a lot, deep fibs in my experience with the pound at least. And it did that again. Beautiful bounce, beautiful candlestick pattern here. Strong bullish candle. Look at that wick right off of that 78.6 fib, and a follow through still to the minus 272 target at 138. The euro dollar has been moving up a lot more than the pound, and that's of course because of the euro pound that has been was in a downtrend but made a strong bullish reversal recently. So this bounce happened after ABC, and that's why I didn't like the pound that much in this area yesterday, because of the fact that it was facing these long-term moving averages, as you can see, was not able to break through that, made one more dash down before it could break above that. So that's why you can see these long-term moving averages are a bit sometimes tough to break. So in any case, price made it to the 61.8 fib, the 610 EMA, and the minus 272 target, and is responding to that level. So at this moment, it looks more corrective, like an ABC zigzag to me. But it doesn't mean it couldn't go higher. Let's take a look at the bigger picture here, because of the fact that 5 waves finished on the 4-hour chart. You can see that a little bit better. 1, 2, 3, 4, 5. ABC for A. We were thinking that this could be maybe a B, and then up for C. But it's a tough spot. You can see long-term moving averages, price is squeezed in between that, with the short-term moving averages right in the middle. So that's a little bit of a tough zone, I would say. In that regard, I must say that it's not, like on Monday, I'm not a big fan of the pound dollar at this particular spot. It might be making some kind of descending wedge pattern eventually. Could be possible. Not a big fan. I think that what I would like to see is some kind of bull flag pattern here, as I mentioned on Monday, and then a break of that flag above the 50 fib. So far, we didn't have a bull flag pattern. We just have a dash down. If we do get a push up and then a down and an up, and we have a flag or triangle, I do think then a breakout higher to test the previous tops here at first makes sense to go back to the resistance here at 138.60. But if we don't get that, if we get a bearish break here, I don't think there's much space either for that because of this support trend line. So I wouldn't trade it there myself. If there is some kind of bounce here, that might make sense to trade up towards this resistance, or if it breaks a little bit further and then a bear flag and then trade the break down, could also make sense. I would rather wait for a bearish break, a bullish bounce, a little bit lower, or the triangle and then the break before trading it. And of course, this also could be a bouncing spot back down as well here in that around the 139 zone. So I think that this is not a good spot for any trade ideas in my view. I think generally it's a tricky spot. I think generally there could be some trading ideas connected to support or resistance and whether price bounce or breaks. But I'm not a big fan of these patterns, to be honest. And I've seen better spots for the pound dollar, myself at least. I'm not too inspired by this chart, as price is being stuck from all sides between the moving averages. Ultimately, if it does get up higher, if it is some kind of correction, then the previous top here, of course, as I said, 139, could cap it as it makes kind of an ABC pattern like that. And there could be a bigger bounce back down again. All right, so that's it for now. Check out elitecurrency.com for more live webinars, research and educational articles, live daily analysis in our blog, and of course our manual and automated trading systems. Wish everyone great trading and see you next week. Cheers.